Welcome to the coffee shop, everybody. This is your host and barista, and I'm going to try and run through this very quickly, okay? This video, I'm going to warn you. This video, wow, I do need some caffeine today. I need caffeine. Anybody want to get me a latte or something? Okay, so this video is for the technically inclined. This doesn't mean that you new guys cannot follow this. I want you to see the technical stuff that I get involved in so that you can ask questions. What does this mean? What does that mean? What are you talking about? How do you get there? Okay, what is this phrase and terminology? The way that you will get better is if you know that certain things exist and you find out you don't know what these things are, okay? So in this video, I am going to let you know that, hey, you know what? I failed you. I did. The other day, I put up a video called Trading RSI Divergences, okay? And I showed you important things. What I showed you was the simple parts. I showed you what is a divergence, right? I showed you which way will it go, right? I also showed you when will it go in that direction, okay? Those were three important things, but they weren't the most important thing, were they? You can be in a trade and in the market and invested in whatever you want, all the money in the world. But if you don't have the ability to take it out of the market at the right time, then you still have made nothing. So the reason I say that I failed you is because early on, like this channel is only a month old, like literally, it's 30 days old and it's doing really well right now. Thank you, everybody. Early on in the first handful of videos, I specifically said to you that I will not just show you how to get into a trade. I won't show you just how to spot a trend or whatever the case may be. I won't tell you, hey, buy here, sell here. What I will also always do is tell you not only how to get into a trade, but how and when to get out of a trade. And the way that I failed you in that RSI divergence video is that I completely forgot to tell you how to set your take profit and why you set your take profit at those particular points. Now, anybody could tell you, hey, your take profit is going to be 1 to 2 risk reward. It's going to be a 2.0 risk reward or a 1 to 3 risk reward. Yeah, you know who I'm talking about. There's people that do that. I'm not going to do that. I'm going to show you specifically where to get out of your trade and how to confirm that that is the place you're supposed to get out of the trade. So in today's video, we are doing a little switch up. We are doing trading RSI divergences like a boss. So let's get into it. Now, there are a lot of things on my chart right now. Don't worry, I will break them down. In the description below, you will be able to read about what every one of these things are. There are 6 key things on my chart, and there are basically, I don't know, like 5 or 6 steps that you can take to actually get into your trade and know exactly where to get out of your trade. They become second nature because this is why I do not want you guys getting an oscillator or an indicator that simply tells you when to buy and when to sell, okay? Do not buy just because it says buy. Do not sell just because it says sell. Basically, all they're doing is telling you that, hey, this is a change in momentum. Somewhere after this, you have to look for a buy location, okay? And honestly, in this algo, the algo is telling you to buy here. What it should be saying is long. That means the trend is changing. And it told you that right after a divergence, and then all of a sudden, you've got to move it to the upside. What happens way over here? You've got your price action moving up here. And then there's a divergence pointing down. So you didn't have much of a move, did you? Anyway, so let's get into trading RSI divergences like a boss. And yeah, don't get scared. I know a lot of you are like newbie traders, not knobs, not noobs. You're new traders. Okay, so let's talk about what's happening here. Now, you already know how to find an RSI divergence. You saw that in the other video. If you didn't see it, then you should go and take a look at it, okay? Because it's important. But I'm just going to skip how do you find it, and I'm just going to go to that you found one, okay? So here you have, let me just do this over. Here, there. Now, you found an RSI divergence. You've got a high here, and you have a lower high here, right? Let's change that to white. And then you look at your chart and you've got a, what? You've got a high here, but you have a higher high on your chart. That means your price is moving up, but your RSI is moving down. That is a divergence, right? So what does that mean? According to the other video, you're supposed to follow the slope of the RSI. But when do you get into it? Well, here's another way to know when you get into that trade. So you found your first Heiken Ashi high candle, right? Here's your first Heiken Ashi high candle. You found that one. Second Heiken Ashi high candle is here. You found that one. Great. Now, what I want you to do is I want you to go back to the first candle and look at the closing price, okay? Here's the first candle. Look at the closing price. I'm going, oh, I don't want to do that. There, I want this. What I'm going to do is I'm going to draw a line straight across the closing price. Okay, we're going to use this one. I'm just going to take that line and move it right there, roughly. That's the closing price of that candle. And I actually want to move it down a little bit, not be above the candle. I want to be on the shoulder of the candle, like across the body, right? Like if you look real close, you could see that the candle is still poking at the top a little bit, right? I want to be right there. Done. So that being said, here we go there. Now, this is my closing price of that candle. I found my first candle. I found my second candle. Now I drew a line across the closing price. That's step 1, step 2, step 3. Step 4, you now have, so at this point, you have to wait. This is why it's a game of patience. You have to wait, okay? So you got your closing price, wait. Price is moving down, wait. You got your second high, wait. This candle shows up and it paints and closes below your price, right? This candle right here, this one, I can't circle it. Anyway, so this candle closes below your first closing candle price. This is a confirmation to the downside. So what you can do at this point is you simply enter the short position, and you enter a short, listen carefully, enter a short, set your stop loss, okay? Do not set your take profit yet. You need to do something. You need to confirm where are you going to get out of this trade. Now, there are several ways to do this. Now, like I said, you can find your candle, right? You found your candles, great. You know what a divergence is, great. There, you know what a divergence is, great. And you know that it's going to be moving to the downside. Okay, great. What I failed to tell you in the other video was, how far will it go? When do you get out of this trade? Okay, so that being said, you have a few options. Now, on step 5, it tells you what you should be doing. First thing to do, once you set your entry, you set your entry, not your take profit. Set your entry, okay? And what is the level of your 50-period EMA? Here's my 50-period EMA. It's a green line. I'll make it a little bit thicker for you, right? Green line there. Yes, I am using the Mass Effect moving average. Don't worry. It's just an EMA. It's nothing special. So here's my 50-period EMA. Okay, if that's the case, then I'm going to draw a line directly across from there. That is my first level of take profit. That's where I would get out first, right? Okay, what else can you do? Do the RSI formula backwards. Yep, you heard me. Do the RSI formula and do it backwards. You entered here. Your swing high is here. You're doing a short, but look at your RSI value. The number is in the positive. Pretend it's in the negative. Really. It says it's positive 9.22. That means it's a what? It's a 2.22, right? Okay, so I'm going to set this to 2.22. That means my risk, reward, and take profit is 2.22 here. 2.22. Right. I can't even get to it. It's so tight. Let me do this. Let me do this. 2.22. There, 2.2. Okay. So the RSI formula carries me from here to 2.22 right there. Now, yes, I am trading a short, even though the RSI is in the positive. It doesn't matter. It doesn't matter because the RSI value in the negative would still be the same number, but negative. I know that price is going to be moving down because we are after a divergence and price has closed below my initial candle close. I'm in a downtrend. Okay, so let's take this as a pullback. When you trade counter trend and you trade pullbacks, you can use the RSI formula, but it doesn't matter if it's positive or negative. Whatever the RSI says, you just do the calculation and you go with it. If you have to trade up with that number, you do the number. If you have to trade down with that number, you do the number. It's just a number. The fact that it has a plus or a minus in front of it is irrelevant, okay? You're doing a pullback, so you know you're gonna have to do it backwards. Now, my 50 period says I need to get out here. My RSI formula says I need to get out here. So let me set this one here. I'm just copying that line and moving it down. Now, what else do I do? There's a Fibonacci trick that I can do, which I'll show you afterwards. Now, another thing which is for the technical people is this. Look backwards for the last place of liquidity or a V-top or a long pin candle where price came to it and there was a break of structure. A break of structure is this. Very, very simply. Look at what's happening here. You have a low, a high, a low, a higher high, right? You've got a higher low, right? It's just stepping up. Higher high, higher low, higher high, and then a lower low. What does that mean? This is your break of structure. This candle is where it broke. So that means this candle right here is your area of liquidity. So you're looking for basically where price is moving up, hit a long pin candle, and started moving down below the previous low, right? Here's that low, but here's the other low, a new one. This is an area of liquidity. I'm going to take a box, right? I'm just going to put it at the top of that wick and go to the close of that candle, not the bottom of the candle, but the close of the candle right there. My box is set so that it extends to the right, just so I can see it for the purpose of this, okay? Now, the bottom of that box is my bottom line, right? Pretty much. The bottom of that box is my bottom line right there. This is where the RSI formula tells me to get out. The EMA tells me to get out here. So far, I have two things telling me to get out at this level. That's 2 against 1. So far, I'm going with this level. Now, let me take off this box. There's a Fibonacci trick that you can use to find another move to the downside. You take your Fibonacci tool. You remember the second candle of your RSI divergence? It's right here. If you look down in my Heiken Ashi, you can see it. Here's the second one. Here's the first one. I want to go over the first candle at the height of the second candle. You see, I'm at this height, but I am at this candle, okay? I'm at that height. I'm on this candle, the first candle. I click once, I go here, right? Just over to that candle. Now, what I want to do is I want to take the white line of my Fibonacci tool and I want to put it at the, not the low, but the open of this candle. The open of this candle is down here. I want to put my white line on that candle and I want to go to take profit 3. Okay, you see the white line. I'm putting it on the low part, on the close, I'm sorry, the open of the candle where it opened at the bottom. Right there. Not beyond it, not on the wick, just inside the shoulder. Okay. Now, my Fibonacci tool tells me I should get out at this level right here. So I have two things telling me to get out here. The Fibonacci telling me to get out here, the RSI formula telling me to get out here, and my EMA telling me to get out here. So far, everything's telling me to get out at this level. I'm going to get out at an area between these two lines. So that being said, I'm going to, this is what I would do. I still haven't set my take profit. So I would set this between the two, unless you want to go safe and set it at the higher one. They're so close to each other, it doesn't really matter. Now, if you look at what the Fibonacci said to do, the Fibonacci was right at the tip of that candle. That's where it ended up. This is not something I made up. I cannot make up the market structure. I can't do it afterwards, right? It's already there. So that being said, that is close enough to my RSI formula, right? I got 2.16, actually supposed to be 2.22 is my furthest. And this trade ended up going perfectly. Now, anyone can tell me in the comments, oh, Eric, it's easy to do all of this after everything was done, right? You're just telling us about, you know, something after the fact. Okay, no problem, if that's what you think. So I'm going to show you that I entered this trade yesterday morning and I got out of this trade yesterday evening or a few hours later. And the only way I can do that is by going to my settings, going to my trading, and looking for my executions, right? And what happened here? Look at what happened. I did a sell from here and I did a buy from here. So this is not BS. I exited this trade at 35.6070, okay? And to give you an idea, I'm gonna draw a line here, there, right? Coordinates, 0.356070, right? And put this one here, there. Now, they're both the same. Nope, I exit 35.6070, is that right? Here, I exited there, 35.6070. I think that's where I got out. 35, yep, that's where I got out. I got out here, and price went down here. So I went to take profit too, because I felt like I was trading in a range. So this is not BS. I entered somewhere up here. I exited down here. And this little pin came out anyway and went even further. So yes, this strategy works, but you need to understand the technical aspects of it. So trading RSI divergences like a boss, you need to build up to this level, okay? You need to understand how to look backwards in your chart and find areas of liquidity. What is liquidity? Previous area of liquidity is right there. Actually, I can delete that one because this one is already telling you. See the algo for the area with volume. See this one? It's got volume, nice and green. Not this one. It's got black on it, but it's got a pin. See the pin? But there's black here. You don't want that one. You see this pin here? It's pointing the wrong way. You want the one that's pointing towards the area of your divergence, okay? Now, this one says area volume. Okay, that's doubled. And what do we have here? Price with loss of volume. This one is a price with loss of volume. So I didn't want that one. Instead, I wanted this one. This is a long pin as well, but it comes up afterwards. I only need this one. So this is a picture of my 50 EMA and my trend line. I got rid of it. So that being said, that's how you do your trading RSI divergences like a boss. Okay, later peeps. Questions? Ask it below. I'll put all the steps down there in just a little bit.